Another sell-off. Stocks wrapping up Monday to the downside across the board, with the Dow Jones Industrial Average down almost 13% since its high for the year back in May, and the S&P 500 down almost 12% from its high, also in May. Here with a look at what's next for the markets is Kevin Kelly, the Chief Investment Officer at Recon Capital Partners. And Kevin, it's good to see you. Welcome back.
Thanks for having me back.
So what do you make of the sell-off we saw on Monday? It seems as though there was more bad economic data out of China. We also had a commodity slump as well.
Yeah, so the real conviction in the marketplace has gone, and so that's why you're seeing nobody knows what's going to happen. But one primary indicator to look at is copper, as you mentioned, commodities, because that's a signal of worldwide growth. So we're seeing the IMF come in saying, hey, we may not approach 2%. You look at the emerging markets, they used to be, back in 2000, 20% of the world GDP. Now they're about double that, 39%, and they're in a slump. So everybody's starting to try to get a feel of where they want to place their bets for next year, and earnings season will help get that out, but right now we don't really know.
And speaking of the outlook, there was a new note out from Goldman Sachs basically lowering their S&P 500 target for the year to 2,000 from 2,100. Do you agree?
Yeah, I mean, that's a really bullish call, actually, from where we are right now. We could see that heading into the year end, and one of the reasons why we could see a year-end rally is because the biggest buyers of stock are the companies themselves. And heading into this earnings season, they haven't been able to buy their own stocks. So what's going to happen is they're going to throw in the kitchen sink during this earnings season. The market's volatile, try to get all the bad news out there, and then they can buy their stock going into the year end. So actually, we think there could be an underlying bid for stocks at the end of the year.
And of course, that Santa Claus rally we tend to get at the end of the year as well.
Of course, it's the holidays. Everyone's in a good spirit.
That's the reason.
Yeah.
But Goldman also thinks the S&P 500 will rise to 2,100 by the end of next year. So that's also a pretty bullish call.
Yeah, it could happen, because what you're seeing is the S&P 500, those are the top premium names that you have globally. And so they've got the best balance sheets, and they are actually a better alternative in a low interest rate environment. So they can actually be fortuitous, go overseas, start making some acquisitions that are accretive to earnings. So next year, I think we'll see a lot of more M&A and happening in the marketplace.
And while we could get to 2,000 by the end of the year, it's certainly going to be a volatile run until then. So what is your strategy on navigating the price swings we've been seeing?
One of the best strategies is to go with what works and what you feel comfortable with, and investors should buy what they know and like. And Facebook is a great name, right? I mean, it's been beaten down here. It's still really, had a great run for the year, but it's irreplaceable, right? And they're trading at, what, 24 times next year earnings, which is great because they're grabbing all those ad dollars, and they keep doing really well with Instagram. They've got Oculus coming forward. So go with names that you like and feel comfortable with, or even ARM Holdings, which is a great supplier for chips through the Apple ecosystem, and they're growing really exponentially, especially in the Internet of Things, and they provide chips everywhere.
All right, Kevin, we'll leave it there. Kevin Kelly from Recon Capital Partners, thanks very much for coming in.
Thank you.
I'm Scott Gamm, and you're watching The Street.